Here's another interesting chart really quick I'll show you. In December 2025, that would take you to $800,000 per Bitcoin. We are on the ascendancy here, right? I mean, just look at this curve, man. Imagine being Peter Schiff and trying to bet against this.
Rumors behind the scenes here, whether it's an executive order or a bill, the Trump administration is very adamant about following up on the promise of the Bitcoin strategic reserve within the first 100 days. My biggest worry for them is that they go too hard too fast and people just start dumping treasuries because they're like, well, the U.S. is explicitly saying that they're worthless.
I hate the fact that someone like Putin is championing Bitcoin, but he's going to know more than anybody else. You can't do too much with gold. That mad dictator is saying he recognizes the value of Bitcoin.
We meet again. We sit down. Tuesday, December 7th. It's 8:48 a.m. Central Time in the United States. The current price of Bitcoin is $107,966, new all-time high. Looks like we're about to blow through 108. What a world. What a time to be alive.
Congratulations, Marty. It's good to speak to you. This quarterly update. First time over 100K. I know you've made the rounds with your accolades over the past couple weeks, but it's good to speak to you. Congrats.
Congrats
again.
to you. Congrats to you too, sir.
Thank you.
It's been a long time coming.
It has indeed. And as we all know, we're just getting started. So what could be more exciting than that as the world is burning all around us here in Eastern Europe?
Yeah, we got the money thing working for us. Six-figure Bitcoin. How big is this?
It's big. I have one that I can show you here. Okay. So, yeah, it's big. It's big. So we have, for a long time, well, I shouldn't say a long time, this year, from early part of this year, we passed the pound sterling as the fifth largest fiat currency. It was about $1 trillion worth. And Bitcoin passed that. So now there's only these four left: the yen, the euro, the yuan, and the dollar, as far as the monetary base goes. But I got one here just to show you a little comparison with gold and silver and Bitcoin and all the different buckets that we have. You might have seen some people tweeting about it. If you count up all the silver ever mined in the world, that's about, my calculation, about $1.8 trillion. So $2 trillion market cap takes us over that. And yeah, so every conceivable metric now, Bitcoin has been above the store of value functions of silver. Actually, as I've been tracking it, it's been about 4 years, because I take off industrial usage because you can't really hodl that. But silver, you got this chart as well. And this is at my website, porkopolis.io/top money. You can see all these metrics breaking down gold, silver, Bitcoin, and where it fits in the loop. So the next one up, if you just look at gold and silver, is the gold in central banks. And that's about $3 trillion worth of gold. It's about 1.2 billion ounces of gold. Bitcoin's only $1 trillion behind that, Marty. So we continue to grow. We continue to accrete into the legacy money supplies of the world. And I think it's very interesting, very exciting. And, when I started to do these updates, over 6 years ago, gold was like, if you looked at gold in central banks, both based on the amount of gold that there was and the price at the time, you were well under $2 trillion worth of gold. But as we've moved on 6 years later, inflation, gold prices spiked a lot this year, $2,700 or so at the moment. It takes us to $3 trillion. And I think that's probably some indication of how things are going to continue to go as Bitcoin hawks on these different money supplies and buckets of value. They're just going to keep growing, as well as Bitcoin. But as we know, Bitcoin has much better utility and grows much faster. So it's a nice little, I think, illustration right there that it's all going to keep growing in dollar terms, even if it's somewhat finite like gold, or definitely finite like Bitcoin. As long as the dollar is still around, It's just number go up tech.
Yeah, last time we met was right before the election, or a couple months before the election. A lot has changed. What do you think? What would you put the weight of Trump becoming president and all this talk of the strategic reserve behind the recent price moves versus just us going through a typical Bitcoin cycle and the manifestation of a Trump victory and the talk of a strategic reserve just being coincidental in where we are in the cycle?
Yeah, it's interesting alignment for sure with the next phase of the cycle. We're going into, if we are on a 4-year cycle, right, we're going into a big one next year. So the alignment is certainly interesting. And I think, as most people probably have said on your show, I mean, Trump's going to be very good for Bitcoin and for taxes. So not surprised that those things happened, that those things lined up. The strategic reserve is a very interesting question. And, if they do it, I hope that they put it in the Treasury. I hope that the Fed doesn't do it, or somehow he doesn't strong arm the Fed to do it, because then it's much more wonky. It's not going to help the national debt. It's not going to help those things. So if they put, if the Treasury, the United States Treasury actually holds Bitcoin, then I think that's a really actual strategic reserve, and it would be very good. Be very good. Something to cut into the debt. That's, flying quite high at the moment. 20 cents out of every dollar is printed in debt. So if you think of the 35 trillion or so, right, 20% of that is roughly the size of the Federal Reserve's balance sheet. How much treasuries they own, that means that basically 1 in 5 ratio, 20 cents on the dollar is actually printed money that represents the United States debt. So anything you can do to put actual hard money, sound money against that would be very good. But we'll see how they do it. I don't know. Trump is turning a lot of heads and doing a lot of fake outs with his picks. So we'll see.
Well, let's jump into this, because Cynthia Lummis has put forth the Strategic Reserve Bill, the Bitcoin Act. And the mechanics of that are such that the Treasury would hold the Bitcoin. And one of the means in which they would originally acquire Bitcoin is take the gold notes that they hold at the Fed, which are currently priced at $42 an ounce, I believe.
Right.
And appropriately reprice those to the market price as it stands today, and then use that delta to buy a big slug of Bitcoin. What are the dynamics at play there? How is this actually going to work? And what does it mean that the Treasury has gold notes marked at $42 an ounce at the Fed?
Yeah, your guess is as good as mine. I mean, it's also a question of whether they even have the gold. That's a whole other conspiracy theory in the financial markets. You got to go to the likes of GATA there. These people have been hard at it for years, saying that the Federal Reserve has been basically manipulating the price of gold lower since the end of the Bretton Woods standard. I can show you a ratio of that, actually. Let me pull it up here. But just to talk around it, I would say that, yeah, it's the United States is the only country in the world that does not value its gold at market, right? They market at this old statutory $42 an ounce, which was the sort of last, first it was $20, then it was $35 under Roosevelt, and then eventually went up to like $42 was the last gasp of air that they could market it at. Where did I have this?
How does that work? How could you?
They're what it does is it leaves room for the United States Federal Reserve to be squirmy with the other assets that it holds on its balance sheet. If it had to respond to the value of gold, then gold would become a larger part of the asset side of their balance sheet. You follow? And if it's a larger side of the asset part of their balance sheet, first of all, that would actually bode well for the dollar, or it would increase the backing, right? If the price was going up, but it would also mean that the Federal Reserve, in order to balance the monetary base, which is the liability side of the balance sheet, would have to not buy as many U.S. Treasuries, and not buying as many U.S. Treasuries is bad for the Treasury. It's bad for the government, right? They want that floor of the Federal Reserve purchasing gold. So here's one. This is not exactly the chart I wanted to show you, but it's going to show you a little bit of a flavor of what I was speaking about here. It's going to take a little bit to load this. I've shown you this chart before, right? So this is the United States federal debt. I think I have this going to September. Yeah, all right. United States federal debt. All right, 35 trillion. September. This is of September 2024. And then let's look at what the central bank, what the Federal Reserve holds as an asset. Okay, there's the Federal Reserve. Basically, it's the balance sheet, right? As an asset, Federal Reserve. I'm counting the treasuries that the Federal Reserve owns as an asset. And as a percentage, peaked at 30% during COVID, right? Almost 30%, 28%. Now it's down to about 19%. So that's where I was saying before, 1 in 5 or 20 cents on the dollar is actually printed money of the Federal Reserve's debt. If gold was marked to market on the Federal Reserve's balance sheet, gold would eat into this ratio, and they would have less flexibility to buy more debt or sell more debt, whichever they want to do. And as we know, they like to have these squirrely terms like monetary elasticity and flexibility and elastic money supply, and they like to have control. So that is why the United States Federal Reserve has never marked to market the gold on its books. Let me find you another chart there. You can go ahead and keep talking if you want, but I'll find you another one that actually shows the gold percentage marked to market.
I'm trying to do the math here on my calculator. It just seems like voodoo to me. Like, how could you mark something at 98% below its market value and just not recognize the value that it's actually trading at?
It's King Dollar, baby. King Dollar. Alan Greenspan made a quote in the 90s that Gatta harps on a lot. He said, the Federal Reserve, I'm paraphrasing, he says, the Federal Reserve and central banks around the world stand ready to sell gold should the price rise. He said a statement as simple as that, right? And Alan Greenspan was famous for what was called Fed speak, right? And you had to sort of decipher what he was saying. He wasn't being very transparent. He would always have these, voodoo type terminology. In any event, people were always trying to interpret what was happening there. And Gatta, if you're really interested in this, you go down the rabbit hole, like Gatta, Gold Antitrust Action Committee. They've like sued the government 1,000 times and all these things. They claim that the gold, is not there. Again, I have no idea. It might be there, it might not be there. I have no idea. It's supposedly under the New York Fed and in Fort Knox. They claim that they've basically leased it out to different banks around the world, which would lower the price. It means they basically sold it off their books, but they still keep it on their books. So if that is the case, obviously that would bring turmoil to the markets, and probably gold would go up way more in value, and there would be just all sorts of craziness. So I just don't know what would actually happen if. But to me, that's the more interesting story about this with gold. Is gold is going up in price. Central banks have been buying gold since 2008, and everybody knows that gold does have a traditional store of value. But we got Bitcoin on here as well, and Bitcoin is much better, So when Russia invaded Ukraine in 2022, one of the things that, Mr. Smart war dictator Putin did was he had his Forex reserves. Now, Forex reserves are like Russia, the Russian central bank holds bonds of Bundesbonds in Germany or treasuries in the United States. And he left those Forex reserves in the securities clearing markets. Like we have FedWire, it's called FedWire Securities in the United States. In Europe, it's called Euroclear. Like the actual custody of those bonds was in those markets, and they were trying to sell them the moment that they invaded in February 2022, but they froze them, and so now Europe and the U.S. have $300 billion of Russian central bank Forex reserves, but Russia has as well, on top of that, about $200 billion worth of gold reserves, which I don't think a lot of people are talking about. It is true that Russia is struggling. We can talk about that later if you want, but they have $200 billion worth of gold reserves that are in Russia. Like the gold is presumably there. So that has protected them a little bit. It's protected their currency. But as everybody knows, Bitcoin is much better. And if you want to have a sound money that's backing your currency, you want to have something obviously that you can move around in a much more secure way, be backed up in a much more secure way. And as we know, the Bitcoin can do that. So that's where I think it's going to be very interesting when states start to actually figure this out. You know, just like Michael Saylor's figured this out, and how they're going to actually put this stuff on the balance sheet. So yeah, it's a long way of saying I do think that the gold is, they're going to have to sort out how this gold is actually valued in the Treasury's balance sheet and the Federal Reserve's balance sheet in the United States. But then once you have Bitcoin on there as well, and it's open season, everybody understands that the United States government can't control Bitcoin. It's buying Bitcoin. The price is going to rise much faster for that as well. So it's a double whammy, frankly, if they can't control this little scenario that you mentioned about pivoting out of gold and into Bitcoin. They're going to certainly need to be careful.
Yeah, I'm just trying to think, like, would it immediately blow out the Fed's balance sheet or completely restructure it? If the Treasury calls the notes, reprices them up to $2,700 from $42.
It would immediately inflate the value of it. What that would do to the liability side of the balance sheet, which is the printing press, the monetary base. I presume they would just match it with keystrokes on that side, saying that, okay, now this matches your bank reserves as well. And then with that, like you said, with that increase, they can switch to pivot into Bitcoin. But even with that scenario, that's still just on the Federal Reserve's balance sheet. The gold is on the Federal Reserve's balance sheet. There is a little bit on the Treasury, some, but not nearly as much that's on the Federal Reserve's balance sheet. So that's what I was saying before. I don't know the Federal Reserve is supposed to be independent. It's supposed to be, right? For all weird legal reasons, as we know, and people like to talk about and study. I mean, the value of the currency, the money supply, all this stuff. It's supposed to be independent. It's supposed to not be able to be compelled by Congress to affect the value of a currency or any president, even though we know that it is. We know that that's the case. I mean, Trump is going to compel them more than anything probably to do things and get interest rates low when he wants them. But yeah, I don't know how they're going to print money or do this gold revalue thing and then move it on to the Treasury's balance sheet. Like that would be great to do that, to have it on the Treasury's balance sheet. But I don't know the mechanics of it. I haven't looked into it.
Yeah. Because that's the other part too. They want to immediately reprice, call the gold, and then sell it to buy Bitcoin. So it's
and this goes back to the same thing. You got to ask yourself if it's actually
there.
It's actually there.
That's like I've been having a lot of discussions with people behind the scenes too, and the number one question is that the most efficient way? Because when you think of the United States, explicitly going to acquire Bitcoin as a strategic reserve. The way in which they do that is going to be massively important because they have this massive debt problem, this massive treasury market. And my biggest worry for them is that they go too hard, too fast and decrease the faith in the treasury market and completely blow that out. So that's like if they get too hard, too fast and people just start dumping treasuries because they're like, well, the U.S. is essentially explicitly saying that they're worthless and they prefer this digital currency and Bitcoin to their own debt. That could cause a massive problem because the treasuries are underlying a lot of the financial system as collateral.
Indeed. And this is gonna, it's eventually going to force the hand of governments, as you and I both know, and hopefully for a good way, right? To temper unnecessary wars and all the rest. But in the meantime, you're going to want to make sure that you get a hold of it without completely exploding the markets. And probably thinking about that a lot. They've been selling a lot, right, over the years that they've confiscated, rightly or wrongly. We can talk about that, but they've been selling a lot of that just on the market for tickets that they print anyway. So that's a bit bizarre. I could show you, this is like, there's a lot on this chart. Let's just put like Switzerland, France, dollar. Okay, so here's the gold price on the right axis. It's been going up as we see here. This is only to March of this year. This is actually way up more even. But if you see here, gold like in the 90s, like look at Switzerland, was always a huge part of its balance sheet. And they didn't actually even mark to market in the 90s. There's another thing. Switzerland didn't mark to market until 2000. But in the 90s, it was actually over the main liability, the monetary base that they print, the gold value. And this goes back again to like pegging things against gold and stuff. You're going to get weird metrics like that if you actually market to market. But anyway, the long and short of it is, if you look at the United States compared to others, they're all around the same levels now, relative, right? I mean, Britain stupidly sold all their gold. The former Chancellor of the Exchequer, Gordon Brown, and former Prime Minister, he like famously sold it at the bottom, in like the start of the 2000s. He sold like most of the UK's gold, so that was pretty stupid. But the rest you can see. Switzerland, the U.S., France, 10 to 20%. All right, here it says as of March, mark to market, it was 10%. So it's probably a little bit even more. That's mark to market. So the actual gold, if you market to market divided by the monetary base, it's gonna be a little bit more even. Whereas if you don't market to market, it's like zero. It's like 0.1%. So yeah, it's a lot of money. That's 500, if we assume, if the monetary base is 5 trillion, right? Which it is roughly 5 trillion and change, 10% of that is 500 billion. So $500 billion worth of Bitcoin would be one of the biggest holders in the world, right?
It's a quarter of the market cap right now.
Right. So, and it's only going to explode it, obviously, when you buy. I mean, this price is on the margin. So if you buy, obviously they got to be careful with that. So, it's very interesting. The
Very
gold,
interesting.
yeah, the gold rub makes it a little bit more complicated because they could explode the gold market as well.
Sup, freaks? This rip of TFTC was brought to you by our good friends at BitKey. BitKey makes Bitcoin easy to use and hard to lose. It is a hardware wallet that natively embeds into a 2 or 3 multi-sig. You have one key on the hardware wallet, one key on your mobile device, and Block stores a key in the cloud for you. This is an incredible hardware device for your friends and family, or maybe yourself who have Bitcoin on exchanges and have for a long time, but haven't taken the step to self-custody because they're worried about the complications of setting up a private public key pair, securing that seed phrase, setting up a PIN, setting up a passphrase. Again, BitKey makes it easy to use, hard to lose. It's the easiest 0 to 1 step, your first step to self-custody. If you have friends and family on the exchanges who haven't moved it off, tell them to pick up a BitKey. Go to bitkey.world, use the key TFTC20 at checkout for 20% off your order. That's bitkey.world, code TFTC20. Well, that's the question that has been flying around some of the people I've been talking with is like, all right, let's think about this strategically, the strategic reserve strategically, and how to acquire the Bitcoin without blowing up both the Treasury and the gold markets in a way, which could create a lot of chaos. And who knows, maybe that's what the Trump administration is looking for, is chaos. And we'll get to Scott Bessent and his history, particularly around currency trades and the way he's been posturing this year. But what would your ideal strategic reserve accumulation mechanism be? So there's been talks of maybe you issue treasuries, you raise cash, and obviously the yield curve is a bit wonky right now, and you want to sort of smooth that out. So, and there's demand on the long end of the curve is falling. So how do you fix the curve by driving demand to the long end of the curve? Maybe you issue 10, 30-year treasuries, and you take 10 to 20% of the cash proceeds that are collected from those auctions. You put it into Bitcoin, hold it within the bond structure, and then let the bondholder benefit from the appreciation of the Bitcoin when the bond comes to term at the end of the life cycle, to sort of drive down the yields on the long end of the curve, and then at the same time have a more calculated mechanical way of accumulating Bitcoin via these auctions.
Would the bond holder benefit because of the yield compression at the end, or would the bondholder benefit because of some sort of participation in the upside of the Bitcoin?
The latter.
Okay. Yeah, man. I mean, there's many ways to do it, many ways to skin a cat. But like I said from the top, the thing you have to do is keep it in the Treasury, because that benefits over the long run U.S. taxpayers. It's a solution to the national debt problem. And like you said, you also have a way to sort of, at the moment, even though I know both you and I are kind of not so fond of this narrative, but you have a way to appease the bond vigilantes, as they say, and you have a way to appease people that still want the U.S. dollar to be a strong currency in the world. I mean, look, if it's got to be, if you want a strong currency, you gotta have it backed by Bitcoin. There's no other way.
It's not even to appease the bond vigilantes. It's just, in my opinion, a stark recognition of the fact that these treasuries are the go-to collateral for the whole financial system. So if the entities using these treasuries as collateral, banks, funds, financial institutions, don't have Bitcoin exposure while this is going on, and the U.S. government sort of YOLOs in. It's like, we're going to let go of control of treasury markets. Not control, but we're going to let them get priced appropriately as we go buy this Bitcoin. Like, that could lead to some systemic fragility, or it's probably already systemically fragile, but
it's already fragile.
Yeah,
it's already fragile. I mean, if we go back to this market, right? So 1 in 5, 20 cents on the dollar is already printed money, basically, right? So there's a floor on the price of treasuries. And as we were saying, if 10% of the theoretical balance sheet revalued in gold went into Bitcoin, right? So that's 10% of 20%, right? So it's just another 2% so far to start. That could be like Bitcoin on, Actually, that's not the correct balance because this is the Federal Reserve's. Forget that analogy. But in any event, the having Bitcoin as a backstop against further both monetary inflation that is increasing of the monetary base, and then as a asset on the Treasury side against further increases of the debt, even if they say that they're going to decrease the debt and cut spending and all the rest. It's only good. It's certainly only good for the dollar. It's just going to be a question of how you get there, and I don't know how well this can be managed. I mean, it's been just a slow train wreck for 50 years, and specifically in the last 15 years since the global financial crisis, 16 years.
This rip was also brought to you by our good friends at Salt of the Earth. You got to be hydrating, freaks. And while you're hydrating, you got to be getting your electrolytes. This is the best electrolytes mix that I've ever come into contact with. Pink Himalayan salt with calcium, magnesium, potassium, sodium, no sugar. It tastes incredible. My favorite is the orange and the pink lemonade. Go to drinksote.com. That's drinksote.com. Use the code TFTC when you make your purchase, and you'll get 15% off. I'm telling you, get on it, freaks. You're going to love this stuff.
Yeah, I think what we're getting at is they have to thread a needle. And going back to Trump's administration, his stated policy goals, it seems like they're really trying to thread the needle. So like a strong dollar, you'd be okay with that from the executive branch if you were reshoring manufacturing, right? The Triffin's Dilemma is the reason why we've been debasing the currency and fine with the relative purchasing power of the dollar falling as we flood international markets with dollars for their cheap labor. It seems like that is changing, or Trump would like it to change. Triffin's Dilemma has put us in a very precarious position in terms of our ability to actually build stuff here and be somewhat robust from external factors, particularly those that we deem to be our enemies. So trying to reshore manufacturing and productivity to the United States, probably want a strong dollar there. So people operating within the local economy here have better purchasing power as they're going out to buy their goods and services. Obviously, talk of tariffs, lower taxes, and Doge coming in to clean up all the inefficiencies throughout the federal government. Those are policy goals that would point in the direction of where we'd be okay with a stronger dollar. In that sense, am I wrong in saying that?
I mean, theoretically, you want a stronger dollar. It's just if you get a stronger dollar, it's probably because you're going to have more demand for it. But then when you have a stronger dollar, it's going to make, as we know, as you said, talk about the Triffin Dilemma, it's going to make your exports more expensive, and that's going to be harder on top of the fact if you're trying to build up the manufacturing base, which is we're way behind on and need to. Let alone, I mean, defense. Like the world is just completely remilitarizing right now, completely different than anybody would have thought after the full-scale invasion that Russia did, and then obviously Trump wants to talk tough on China. It's just some crazy stat. I mean, I don't even want to misquote it. I mean, it's something like 100-1 of, if you talk about drones, like what Chinese drone parts can do compared to America, like drone manufacturing and parts of drones. It's just insane. I mean, there's so many things that you'd have to onshore, and it's going to be painful when they do it. And it will be even more painful when you have a strong dollar to do that. So it's not going to be easy. People got to be okay with, higher prices. They got to be okay with paying a little bit more, buying American, building American. It's like the complete opposite view that was going on from the 90s. And it's also potentially, going back to your interest rate discussion, going to be more difficult if we're in a rising interest rate environment. And in general, we are in a rising interest rate environment, right? Like one of the most absurd headlines I saw, I don't know if you saw this, but with all the Syria mayhem, they were comparing Syria to the fall of the Berlin Wall. And obviously, I mean, I hope the people of Syria can stop fighting and have, a great future. They've been like decimated by the Russians for the last 10 years. But as we know, there's a lot of factions there. It's not exactly like everybody with a united view to move forward in the world with peace. I hope they do. But even to invoke the Berlin Wall right now in this time is like just completely different. I mean, when the Berlin Wall was falling, like people were tired of totalitarianism. They were tired of communism. Interest rates were on their way down, which is one thing I think a lot of people don't think about a lot, right? Like interest rates, we were going into summer, right? We were going out of winter. We were going into spring. As far as like the global cycle, if you believe in that, like the 60 or 80 year cycle, like we were going into a low interest rate environment, higher productivity, high growth. And of course, the U.S. exported a lot of that inflation even more to make it easier, which was probably a mistake looking back in hindsight. But now, with all of that inflation that's out here, right, we've seen for the past couple years, both in Europe and the U.S., like Western central banks have had to raise rates to not only the COVID inflation, but before that, right? I mean, it happened before COVID as well. They were trying to raise rates. And going back to your discussion about the yield curve, like that's going to make it very, very difficult to do these types of things that we want to do. If it's about like, strong manufacturing base, bring things back on shore, yada, yada, yada. I mean, it's just like it's a headwind upon a headwind, right? It's well easier said than done. For sure, you have to cut spending. That's 100%. I hope they can do it.
I'm all for Doge and Elon and Vivek, and now looks like Thomas Massey coming in to cut spending. But I think it's been, frankly, a bit of a LARP because the whole we're going to come in and cut spending conversation has completely neglected the fact that most of the spending is defense and entitlements, which are third rails that can never be touched.
Yep. I mean, defense is going to increase more, no question. I mean, with everything that's happening in Russia, Iran, it's going to increase. And like you said, the third rails of entitlements, it's just a massive, massive component of that. So yeah, you're left with, environment, education, a couple things, and we'll see what they can do. But it's, I do see on the asset side, Bitcoin can help alleviate some of this, right?
How so?
And no, again, just having a solid asset that everyone wants and is unconfiscatable, that is absolutely a boon if you as a government hold that. Just like if you held gold, it's going to protect your the purchasing power of your currency on the liability side, which is how it looks like from a central bank perspective, right? When they print the money, it's going to protect the value of that in the marketplace, right? Not even talking about what percentage of it or what the backing needs to be. And like we said before, if right now the Federal Reserve's, if it's 10% of the Federal Reserve's balance sheet could be in gold if you mark to market, obviously that's a huge amount of Bitcoin. So whatever the percentage is, we'll see. It's gonna be very disruptive to markets and probably only good for Bitcoin holders. So I like all those arguments, but yeah, I mean, it will be good. It will be good for Bitcoin holders, and it could be good for the massive debt here that you see on the screen as of September, 35.4 trillion in federal debt. They just, you're going to have something to offset that. I've shown you the actual Treasury's balance sheet. Have I shown you that before?
Yeah, I believe so.
Yeah. So like, we don't have to go through it, but I mean, the Treasury's liabilities are even higher than this. Like this is just liquid securities. These are treasuries. It's something like 45 trillion is like total liabilities of the federal government.
Most of the
45.
assets are like land, right?
Yeah. It's like some property, some land, some gold, a little bit of gold as well on the Treasury's balance sheet, as we said. So if you have Bitcoin there, and as we know, Bitcoin is scarce and will go up in value as people demand to hold it, that's a great offset. I mean, that's something that will actually, it will give more faith in the Treasury, in the marketplace, than it might have now. One of the things, I don't want to get deep into it because I don't quite understand all the things he's doing. He's doing crazy things, but what Javier Milei is doing is he's trying to transfer a lot of the junk that is in the Argentinian central bank to the Treasury of Argentina. And that doesn't sound good when I say the junk, but like, making sure the Treasury holds a lot of the Forex reserves, gold, all these things. So it is on the people's balance sheet, and it balances the debt of the government. I mean, remember, he said he wanted to close the central bank. That would have been amazing, right, for us free market people. But obviously, once you're, the mechanics of that, I understand, get pretty political and pretty hot pretty quickly. It'd be quite difficult to do. But he's trying to do something like that, basically, is what we're talking about, right? It's just make, he hasn't talked about Bitcoin so much, but, he's talked about dollarization, and he's talked about holding foreign currency assets from the Treasury's perspective. So it's the same thing with the United States. It's just like on another level, right? Instead of just issuing all these treasuries and paying for these services that we seem to be on a very slippery slope to do, at least have a hard asset that can give some confidence in holding that treasury, that if something goes wrong, well, at least you have some Bitcoin that can back it up, right? Of course, they're never going to default, as we know that. They're never going to default. It's always a soft default. It's always print or borrow more to cover the shortfall. And as we know, this is now the tune of like trillions of dollars a year, the deficit. So, but look, I mean, Trump's got a big ego. He's got smart people around him. Let's see what they can do. I hope that they can sort something out here.
Well, there's two things I want to talk about. I'm trying to think of which one first, but we'll come back to Trump's administration, because I think this is something that's not being talked about enough, which is the fact that the Fed has lowered rates by 75 bips from the high that they drove rates to.
Yep.
Post inflation breakout, and the long end of the yield curve of U.S. Treasuries has not played ball. We've seen the 10-year spike up to about 4.5% since September, when they started cutting rates, and that is, again, something I don't think people are talking about enough, is because you would expect if the Fed's going to lower rates that the long end of yield curve rates would begin to come down now, but they have not been playing ball. What signal does that send to you?
Just I'm just looking at it right now. They had a big drop today, like 40 bips.
Oh, really?
Yeah. I mean, whatever. It's
intraday.
Yeah, it's still hard to tell, but yeah. I mean, it's on the margin, right? It's on the margin. Let me look at the balance sheet really quick. I could pull this up here on a chart for you guys, but just quickly, because I haven't looked at it in a bit. But the balance sheet, yeah, it's like still in total, still going down. So usually when you decrease the balance sheet, right, you're increasing the interest rate. It's still like on a somewhat downward trajectory, the total balance sheet of the Federal Reserve. And it's just showing that on the margin, that's enough for the market. They can still drop rates a little bit and keep decreasing the debt. I don't know how much longer that's going to last. They're talking about doing 2 more cuts now. in the next two meetings. So, at some point it's going to seem like they're going to have to start buying assets again, which means buying treasuries, which means pushing down those yields more. But at the moment, they don't have to do that. So I'm not really sure exactly what the market is saying, but it's not reacting as normal as it does.
Yeah. That's one of my biggest worries is that you have all this hope, change, MAGA coming back into the White House, and red wave here. We've got the House, the Senate as well. Many would argue the Supreme Court. And are they just going to get blitzkrieged by some wonky economic crisis that's what that says to me. The fact that rates aren't playing ball with the Fed policy is that something's wrong in the background.
Well, we have a new asset that, like I said, is 2/3 now of the value of all central bank gold. There could be a lot of things happening in the background that we don't quite understand. Governments aren't so good at keeping secrets, but if if this comes out that some big players are buying other harder assets as opposed to the typical treasuries, just who knows, man? It could be a major event for Bitcoin. I don't know. I certainly feel very good that we have Bitcoin and we have this escape hatch, and don't have to worry about these things theoretically. But look, I think you have a similar view of mine. We have big players now like Saylor, obviously just making huge moves in the Bitcoin market and in the financial stock markets, right? But he's still talking the game of sort of the old TradFi world, right? It's the dollar, still going to be king dollar. We're going to have Bitcoin. It's an asset, this and that. That may happen, but it also may be the case that, due to people rushing toward the exits, and that could be foreign investors as well, that you do have some sort of a treasury crisis or a dollar crisis as Bitcoin is sort of rushed in as a new safe haven. I haven't seen any signs of that. I don't even know. Other than obviously if we saw treasury markets go way more haywire than what you're describing, right? Not play ball in a big way, obviously just shoot up, in a big way. But this is why we're in Bitcoin, right? This is why we're in Bitcoin. Yeah. We talk a lot about a lot of other things, a lot of other politics surrounding money and debt and economics, but at the end of the day, being able to have that escape hatch is very important. And I saw, even, I don't know if you saw this, even Putin mentioned at a speech recently Bitcoin.
Yeah. Can't control Bitcoin. Can't ban Bitcoin.
Yeah. And this is for listeners who don't know me, or, as I come back as probably one of the only in the small Venn diagram of people that support Ukraine and also like Bitcoin. I think it's me and Peter Todd only. But
I saw Peter last week. It was great to see him. Shout out to Peter.
Shout out to Peter. There's a very small intersection there, but everybody's got to know that. Look, the Ukraine war was a perfect example of that. I have nothing but hatred towards Putin and what the Russian army is doing to the people of Ukraine. And look, and they are fighting heroically. We had Ukraine now is fighting North Koreans, Putin's army. North Koreans are raping their translators. They're addicted to porn. It's a crazy thing. And this is all happening in It's like World War II style. This is happening on the front in Eastern Europe. And Ukrainians are fighting them with pretty much minimal help. I've been very strong that we could have kicked them the fuck out of Ukraine, 2 years ago. But we didn't do that. They rattled the nuclear saber, all the rest. And what the Ukrainians have done is they have basically allowed for another genocidal dictator, Assad, to be overthrown in Syria. So they're doing like just a Herculean job, okay? But at the same time, we're also in like a weird, not a debt crisis, but we're in a weird where, everybody's counting their last centime, their last cent. Everybody, even though for America, all you're doing is sending old kit if you're going to send stuff to Ukraine, and it would be new jobs and new weapons for new stuff. That's a very political issue to give more money in America. Europe, is doing more, should do more. But you have this neutral asset that even this genocidal dictator like Putin knows it might help him preserve his own war chest better than the international forex reserves. Like I said, the German bunds, gilts, UK gilts, US Treasury bonds that they have, the Russian central bank has on their books, that they foolishly left on their books before they invaded. Like that whole world is crumbling right now. So they're like, look, I mean, I sort of hate the fact that someone like Putin is championing Bitcoin, but he's going to know more than anybody else. I mean, you can't do too much with gold. They have all their gold. I'm sure they're doing some things. I've looked a little bit on their balance sheet. They still have their, the Russian ruble is not looking good right now. The Russian economy is not looking good. They don't have people to fight the war. They got North Koreans coming in. It's not good. But you still have this genocidal dictator touting the benefits of Bitcoin. And so I would say that's a lesson for the West in that, look, I mean, the United States, again, we could have just, forget NATO, and it should be a NATO coalition, which is what we had in Kuwait in 1991 when Saddam invaded. Not talking about the second Iraq war, the first one. And, it was done swiftly, and the U.S. acted with a coalition and restored international borders. They could have done that here in Ukraine, but it chose not to. Nuclear saber rattling, all the rest happened here with, and the Ukrainians are suffering. But the U.S. is going to have to understand that at some point, like, you're going to have some sound money to back up your war chest. And, from that side, there's a signal from other leaders. I think that, something like Bitcoin is going to be the one, because Putin has a lot of gold. And, I don't know, maybe the Chinese are levering it somehow with him. And it seems like gold markets are moving a little bit more towards Asia. But still, no one wants to hold yuan. Like, do you want to hold yuan? Do you want to hold rubles when you're trading and hedging in and out of gold? I don't think so. But people would much rather hold Bitcoin if you're trading in and out of your own currency, whatever it is. And so that seems like a more logical next step in the sort of, game of risk that we're seeing on the world stage right now. So,
this gets back to Trump's administration, particularly Secretary of the Treasury, Scott Bessent, and the game of risk that you just described, because I think that if I'm reading the tea leaves or trying to pull out a potential scenario of what's actually happening behind the scenes, obviously the strategic reserve has been announced, the intent to acquire one at least, and you want to reshore all your manufacturing. And there's obviously been this big BRICS coalition building up over the years, which has publicly signaled a number of things, one of which is that they want to acquire a bunch of gold and potentially launch a gold-backed currency used by the BRICS nations. And one of the theories that's been floating around, which I could see some validity behind, is the fact that the Trump administration has identified this BRICS coalition and their intent to acquire a bunch of gold and back a currency with it as a potential threat to dollar hegemony and the dollar's status as reserve currency of the world. And so they're deciding, hey, we recognize you're acquiring all this gold. We're going to go after the Bitcoin, this new asset, which is better than gold, and try to sort of torpedo your intent to go build this BRICS currency backed by gold. And the bringing in of Scott Bessent specifically is very interesting, considering his history working at the Soros Fund. I believe he helped him with the pound trade. Very famously made a lot of money on a big yen trade, and has explicitly said, particularly this year, that he would like and believes that there needs to be a Bretton Woods 2.0, a monetary reset. And so, game theoretically, the United States recognizing that the BRICS countries are going after this gold reserve and are going to try and replace the dollar with that, saying, we see that you're doing that. We're going to go acquire a bunch of this other scarce asset and sort of torpedo your goals in that direction. But then, as you mentioned, that's I said this on Rabbit Hole Recap a couple of weeks ago and many other podcasts since then. Like, I think Putin's overt recognition of Bitcoin as something that cannot be banned was a counter signal, like, hey, we're aware of Bitcoin too. Like, we can play in this game.
Sure. I mean, U.S. cannot ignore it, no matter what anybody tells you. And obviously, listeners and viewers of your show know it more than anybody else, is you cannot ignore that. So as much as I despise someone like Putin, he is, exactly like you said, sending a signal that you cannot ignore and you have to pay attention to. And that's just no question that it's going to keep building up. We're at 2/3 of the central bank gold, Marty. It's unbelievable, right? I mean, you don't even have to double in price from here, and Bitcoin would be valued more than all of the gold that Russia has, China has, the US, wherever it is, all that gold put together in gold vaults. You only have to get to 3 trillion to get to that value. So we're like, the future is pretty much here. I think as far as I'm concerned. How do you think it would portend to the next cycle? Do you think we're going to have as much of a down draw as we have had in the past cycles? You know, we have like blow off tops, and then we usually have a big drawdown.
Sir, I'm insulted. You obviously have not been listening to the show.
Sorry for our listeners that you don't have to repeat it then. Just say
no, I'm kidding.
The last show.
No, it's more a Rabbit Hole Recap. But no, I mean, it's been a bit tongue in cheek, but I've been putting the Supercycle meme back out there. Suzu was a cycle too early. I don't think, if it all depends on how things materialize, particularly here in the United States. I think in the next year, like, if rumors behind the scenes here is that the Trump administration is very adamant about following up on the promise of a Bitcoin strategic reserve, and some people are confident that whether it's an executive order or a bill making its way through the House and the Senate and to Trump's desk is in the realm of possibility of happening within the first 100 days. And if that happens, I mean, it's funny because we've been talking about this for 16 years now. Is that the game theory of Bitcoin, the only winning move is to play. Mm-hmm. And I think Bitcoiners have done an incredible job of choreographing exactly how this is going to play out. It's going to start in this niche, dark corner of the internet, nerd, funny money that nobody really takes seriously. And then eventually they'll reach a price where early adopters that are tech forward and receptive to a new way of operating a global monetary system begin adopting it, and they begin acquiring Bitcoin and using it as their savings vehicle and benefiting from that through the years. And then eventually businesses are going to recognize that, and ultimately states, federal governments, nation states are going to come to the same conclusion. And you're going to have hyper-Bitcoinization. Maybe hyper-Bitcoinization has been happening for the last 16 years. It's just not, people just can't feel it as much as we may moving forward. So yeah, like I think it's contrarian, my point of view in the space. People are dead set on 4-year cycles continuing. Will go up, blow off top, and 60 to 80% drawdown. I find it hard to believe that the cycles are going to play out the way they have throughout the first 16 years.
It's so this is one of the ones I look at. We have this analysis where you look at the market cap divided by the trailing 12-month network revenue, and it's still Bitcoin. Bitcoin needs to be huge for this number to get huge, and no one knows what this multiple should be. But so trailing 12 months, we're still only at about a $15 billion Bitcoin miner market. So miner revenue, that's the fees plus the block reward. And I just roll this over the prior 12 months. So you just have this simple metric, right? It maxed out in 2022 at 16 billion. All right. Then we went down into the bear, back up again now to 14.8 billion. It's an academic number, obviously. I mean, people merge mine and they do all sorts of other things, right? So this is just the Bitcoin blockchain. But if you put the market cap on that and then you do a multiple, right? And we're now, as we know, this cycle, we're now over 2 trillion here. You get what I call the price to sales ratio. All right. And for our listeners, basically, it's just a multiple. It's how many times the miner revenue on an annual basis goes into the market cap. And if it's overextended, it'll be quite high. If it's, if we're in a bear, it'll be a quite low number. So in the last cycle, the peak was like 170 times. The market cap was 170 times the revenue. And now we're already up to 140. It's just, it's just sort of an academic thing that I'm doing. It's if we get up to the 98th percentile, it could be 300 times if we stay on the same trend, right, that we've been on basically. But yeah, right now we're at about 120, 128 times. And, it's still a volatile asset. It's still gaining adoption. It's hard to tell. But using this sort of metric, it kind of puts things in perspective still. Like the gold market, for example, is still going to run at something like 100 billion a year. Okay. So I just said the Bitcoin market is like 16 billion in revenue, not market cap. Oil markets are like $1 trillion industry a year, right? So we're still so small when you look at those sort of base comparisons. But it's getting up there. It's getting up there. So anyway, this is another metric that I track. You want to look at the power ratio?
Yeah.
Power curve.
But before you describe it, like, what does your intuition say
about
cycles
the question of the
forward?
bear? The question of the bear and the cycles?
Yeah.
My intuition says that we will have more craziness. I'm not sure if it's going to be in the same form as shitcoin blowups and people trying to do mega yield or whatever they do to blow up the margins of the market. But I'm very sympathetic to what you are saying, but I do think that it's possible that we overextend and we just kind of come down again. Whether it's 80% drawdown, I'm not sure. But that is the way the Bitcoin has been growing.
It's totally plausible that you have all these big entrants and they go completely degen, over-lever themselves, and blow up.
I mean, it might happen in the TradFi markets. It might happen in MicroStrategy. It might happen. It could happen in many different places now, obviously, with all the financial instruments that we have with Bitcoin, not just on a few random wacko exchanges or made-up crypto projects. So yeah, it can definitely. There's no reason that it wouldn't, or not necessarily a reason that it couldn't happen again this time. So I do think we'll probably find some mania a year from now.
Well, let's get to the power lines and see how high.
Yeah.
We could potentially go.
So zoom in a little bit here. I put the multiples now on so you can get it a little bit more understandable. Before I was describing things in terms of sigmas. This is the same chart, but I always told you that it's based on percentiles, which is not a bell curve. Sigmas are typically a bell curve, but regardless, I'm measuring how often the price is above or below this power trend line, right? Which is 96% R squared. And we got above the 1 sigma or 83rd and a half percentile, the blue line on the top here in 2021, 2022. Now, as of just the last couple weeks, right, from mid-November month, we've gotten over the trend line. So we were dogging it for a long time on the trend.
Something happened to your mic.
Can you hear me?
That's better.
So only now in the last month, we got back above that trend line, that black line, because we were just dogging it for a long time. A little bit with the ETF approval boom in the start of the year. But, we were from 2022 June to now, so 2.5 years, we've basically been below trend. So we're finally above it. 100K, looks like there's no stopping it. Bitcoin's in the news. Strategic reserve, whatever the rest you want to say, we're finally above it. So if you go back to those possible upside trend lines, and let's just say the end of next year, again, no financial advice, but the 1 sigma up, or the 83rd and a half percentile, 270,000, and then if you get up to the 97th and a half percentile, it means 97% of the observations, 97.5% of the observations are below the red line. It could be 800,000. And if you want to know what what I'm basing those on, it's just seeing the percent of time that the price is above or below this black line. So to get to a 6.4x multiple over the trend in December 2025, that would take you to $800,000 per Bitcoin. And again, people run different. There are different people that run different sorts of metrics. I've just had this one always, but we see that it happened in 2017, 13, and 11. Did not happen in 2021. But it's an interesting look. Any questions? We've been looking at this for a while.
I know. I find it hard to believe that we don't top tick that red line. Because that's the other thing. Well, let's talk about Saylor too. What could prevent the price from running outrageously and prevent the supercycle, like blowing out? Like, what are your thoughts on the convertible note strategy specifically?
I mean, I think it's smart.
Yeah.
He's got free money, basically given to him to buy Bitcoin, and his, liquidation values still are extremely low. I haven't paid attention as much as perhaps you, but I don't know what it's like. The price would probably have to dip below like 20K for a long time, right? To default.
Yeah, 16K it would have to get to.
16K, yeah. So I mean, he's using the market to his advantage, and as he should.
Well, that's another factor that factors into my maybe this time is different. And I know it's going to blow up in my face, and we'll likely have a blow off top and a correction. But when you think about the demand factors, whether it's United States Strategic Reserve, I mean, explicitly in the bill, go out to the market, buy Bitcoin every day, and then hold it for 20 years. So you're taking what the U.S. government hopes to be around 5% of the overall Bitcoin market off of the market over the next 5 years and holding it for 20. You look at MicroStrategy, the way they've structured their convertible notes very smartly, making sure that they capture a full 4-year cycle. So most of them are 4 to 8 year convertible notes, I believe. So you're able to take that, buy the Bitcoin, and then not have to worry about the debt ultimately if it doesn't convert to equity till 4 to 8 years down the line. So you're sort of de-risking that strategy and taking Bitcoin and likely holding it off the market for that period of time. I mean, we've got Battery Finance in our portfolio. They just did their first duly collateralized commercial real estate deal where they're refinancing, in this particular case, a multi-use property in Philadelphia and collateralizing the loan with the property and Bitcoin that was bought with the proceeds of the loan. That's a 10-year loan. And I think that's going to be a big trend. This cycle is Bitcoin beginning to fit into credit markets because all these credit investors are looking for better return.
I saw that.
And you're pulling Bitcoin off the market and holding in these long duration credit products.
Yep.
Which just creates like a higher floor, I imagine, or a sturdier base.
Yeah, I mean, it's literally the exact same principle that we were talking about when we were talking about what the Treasury could do, right? Right. I mean, whether there's upside appreciation for bondholders or not, that's a whole different thing, whole different question, I guess. But for Treasury bondholders, but yeah, if you're talking about for private credit and you're talking about financing some what might be some sort of sketchy or kind of risky deal, not sure where rents are going to go, you're not sure where unemployment's going to go, you're not sure where interest rates are going to go, and you're able to secure that with a very sound asset that regardless the investment vehicle is going to need to keep on their balance sheet, and the loan that is drawn on that property, a portion of that must go into Bitcoin. I think it's a wonderful strategy, and it's a virtuous cycle, right? There's no from the side of it certainly could be abused. It certainly could cause a blow off top like during the next phase of the cycle or whatever, and it certainly could harm people on the downside as well. But the key is if you're treating it not as a sole investment, but as sort of a diversification of your investment, of your whatever, whether you're a bondholder or even the investor, like a real estate developer, having another asset besides just the collateral of the property is only for the good, right? I mean, you just created instant diversification with the most liquid asset in the world that is not otherwise doable, right? To do that with a gold bar is very difficult. You could do it with like a treasury market thing, but why would you do that, right? Typically. So yeah, you're creating value and you're creating sort of a diversification in your collateral stack. I think it's extremely important for the market. So I think that's nothing but good in general. It's probably going to have some blow ups, probably going to have people that are too risky with it or don't have their covenants strong enough, or the underlying investment is not good enough and they get called out, or they get margin called because the price starts to tank and they didn't think about that. You're certainly going to have that. This is finance. This is what leverage is all about. But as you and I know, and your listeners well know, Marty, like we are on the ascendancy here, right? I mean, just look at this curve, man. Imagine being Peter Schiff and trying to bet against this. He's been doing like slight
about faces.
Slight about faces. I've been enjoying it. Some of his debates. It's so funny. Saying like he never thought gold would go to 100K. Like he never said explicitly that it couldn't happen, which is absolutely false. But he definitely said it many times in tweets. But to say like, I always hedged my bets, said it could happen, but people are stupid, this and that. Looking at his his squirming is just always, it's quite funny now.
It's exhausting. It's like, all right, Peter.
No, you have to take a view that he just, this one we already talked about. You want me to show you this is the latest on the monetary base. So they're still printing, by the way. Other currencies are still falling in value relative to the dollar, relatively. We're still at this sort of relatively flat $27 trillion worth of base money, which we have been since the last 2.5 years. Okay. So this is just the total monetary base. This is the money supply that's analogous to Bitcoin. If you want to see more on that, go to this page on my website, porkoblis.io/top money. But if we look at the weighted trailing 12-month changes, we see that fiat currency's like been nothing but getting more volatile, right? And then again, just to show you this, remember this is the black lines are a little bit different than measuring the change in the dollar, right? The black line is saying like they're printing a lot more, but the dollar value that you see is still kind of flat. You know what I mean? So they were really trying to cut down the deflation. You know, those Jackson Hole speeches of 2022, 2023. Like everybody knew that they'd have to cut down this, cut down the inflation that happened from COVID, right? And they did. And we saw SVB and all sorts of other banking failures, some coerced as well. Silvergate signature, right? But now they're printing again. On net, they are printing, even though if it looks flat, this is one of these weird illusions, right? It looks flat in dollar terms, but if you measure the growth rates, you isolate them each month, you can still get to a number that shows you a little bit better a native change. They're printing again about 3% per year, and we're still at this about 12.7% is the all-time figure. And so again, 12.7% per year growth rate for the monetary base since 1969. That's a doubling less than every 6 years. So that's still the case, even if they say they need elasticity in the money supply and they need flexibility in the money supply and they need to increase it or decrease it, whatever it might be. Still, at the end of the day, mostly all they can do is print. And if you compare 12.7% to like population growth, it's less than 2%. If you compared it to GDP growth worldwide, it's like whatever, 3-4%, maybe 5%. I'm not sure actually exactly worldwide GDP, but the United States certainly isn't that high. Money prints faster. So that's what you guys got to think about. And again, this is why we do Bitcoin, right? Here's another interesting chart really quick. I'll show you, Marty. Actually saw this. Natalie Brunel did a tweet. She wanted someone to sort of graph it out. I'm not sure if she used it or not. I tweeted it at her, but let's just take off. Like if you use just federal, this is United States, right? Federal Reserve data. And if you just look at a few different things and look at how they grew since the 70s, it's pretty wild. So like median family income, real wages, they haven't even grown since the 70s. Most people, or you might have heard that, right? Like inflation generally is faster than real wages. So median family income is since 1969 is 10x higher. Median sales price, and some commenters on my YouTube channel said that this should probably even be less because houses are bigger now, and they were smaller in the 70s. So actually, this probably should be even less high than it is. But 17x is the median sales price of homes compared to what it was in 1969. The S&P now way higher, 60 times. So this in itself tells you something about where inflation goes. Does it go into your income or does it go into assets? That tells you something. 60 times. The monetary base, 80 times, 90 times. So this is the printing press, right? It's the United States monetary base. It's the printing press. We talked about it at the beginning of the show. Also, the update that I do. And then if you look at CPI, it's the tomato red line here. I'm going to put it on. Where do you think it's going to fall?
Below.
Below all of them?
Yeah.
Yes, sir. It's another reason. This is like the only.
It's
this
so
is like maybe the
egregious.
This is maybe the first time I put CPI on a chart, Marty, and it's fitting. I never use it. I never recommend using it. Don't think about it for your family or anything. The CPI index is only 8 times. They say that it only costs $8 now in 2024, $8.50 compared to $1 in 1969. That's what they say. That's what the Federal Reserve says. This is even includes the food and energy item. This is for all urban.
Criminal.
Is that unbelievable?
It is criminal. This chart is insane. For anybody listening on the podcast, like, you should know by now, if you're new to the show, Matthew and I meet quarterly to do the monetary base update, and he comes packed with charts. And so these episodes are best viewed on YouTube or Spotify, if you have Spotify.
Yep.
It's criminal.
It is a good one.
They're literally like, how could they honestly say that the CPI has any validity or any reasonable predictive power, or not even predictive power, that it's representative or descriptive of what's actually happening in the economy? This is insane.
100%. This is why you need to own assets if you want to keep up in life. And even house prices are not even close to stocks or the actual printing of money. And you can go, let's go before the GFC. I thought there was something interesting here, if I can remember. So it's interesting. Even the monetary base is still growing faster than CPI, but stocks actually did keep up with it. And you see here was the NASDAQ boom, and then getting on into the 2008 boom, the GFC. An argument to be made here. Like this was also when I started getting into the stock market, like right around 2000, 2001. 2002, and right after the NASDAQ boom. And I just remember, like, okay, this is what I need to think about in life, is diversification and stocks and everything else. And it was already at that time that the monetary base, the printing press, was like basically going to overtake it. It was already more money printing faster than the growth of the stock market. And then that just exploded from the global financial crisis. I mean, it's not even a competition anymore. The monetary base is 88 times higher than it was in 1969 compared to the stock market, which is 65 times higher.
Do you think we have another big print around the corner?
That's what they're saying. I mean, they're saying 2 more rate cuts. So again, like we talked about earlier, it's very interesting that they have had this rate cut and this easing, right? And they've still been able to decrease the balance sheet. Usually it works the opposite. Again, everything's on the margin. You just have to see. And, it's not so normal, right? And again, never financial advice, right? But we're Bitcoiners, and I'm just glad that we have an asset that's sort of like an escape hatch. And if you're in the United States, just listening to this in the Midwest or whatever, like, and you're in the real estate business, sure. I mean, there's always going to be a place for that. But if you're over here in Eastern Europe, if you might need to literally run without doing anything and pack up because the Russians are invading, Bitcoin is absolutely the best thing to hold. And I never thought I would actually be saying that, Marty, in my own sort of neighborhood, but this is the kind of stuff that we're thinking about. And it's like, I'm very glad that I'm holding Bitcoin, because you might actually, in certain situations, you might actually have to pack up and move. And, just so happens that that's a better asset anyway in the United States, even if you do have strong markets and strong defense and a stable, well, relatively stable currency. Bitcoin's still outperforming, as we know. So, yeah, don't listen to Peter Schiff.
Sound advice. Well, let's get
I really want to dig into Scott Bessent. Like, can you illuminate the freaks about the Soros pound trade and your thoughts on what a Bretton Woods 2.0 monetary reset would look like if they actually tried to go execute on that?
Yeah, I mean, I don't have any sort of inside information on how he was working with Soros there, and was Jim Rogers involved with them as well?
I think so. Yeah, he was.
Time,
I believe so.
But yeah, obviously they broke the Bank of England, which was pretty wild, betting against the pound. But look, it goes back at the end of the day. If you're going to have, at the end of the day, governments have always pegged their currency to a sounder money. It's only in the last 55 years that they have not. Okay. Do I have the gold chart still on here? I do. I actually have here. So if you're still watching, dear viewer, like they don't have such great data here, but if you go back to like the 1800s, you got the pound sterling, you got the French franc at various times for whatever the currency that they printed. If you looked at, so that's a liability on their balance sheet. If you look at the asset side of the balance sheet, you would have something like gold. And it is not actually, contrary to what some people might tell you, it's not always 100%. It's usually a smaller percentage, right? So 20, 10, 15, it stayed here something like 13, 14% with the pound sterling for a long time. Then it went up after World War II. They tried to revalue after spending a lot, and that caused the pound to decrease in value and all sorts of other stuff. But anyway, it does constrain governments. They always go off of it during war. I don't want to, let's not, Logan, you don't need to show this chart. It's just too much while we're talking about it. But the point is, look, governments, it's very simple, right? I mean, everybody talks about the backing of a currency. It's never been the case that there's ever been a 100% gold-backed dollar or gold-backed currency. Usually it's a smaller percentage. In times of war, it could be that gold flows into a safer place. For example, the United States. The United States went over 100% actually if you looked at the gold in its vaults over the currency that they had printed. And you marked it to market even during World War II. Okay? But gold is, and by the way, before, so the reason Bretton Woods started was, which was this conference right after World War II, or as World War II was ending across the world. It was in 1944. World War II, of course, ended in 1945, depending on where you were in the world. But the Bretton Woods conference recognized the fact, and there was all these great economists like Milton Friedman and Hayek and Mises were there, and John Maynard Keynes was there. They all recognized that because of the madness that happened in Europe, all the gold, like 80% of the world's gold. We talked about, Bitcoin is now 2/3 of the world's monetary gold, that is central bank gold. 80% of that gold was in the United States after World War II. So you had the situation where you had a democratic, safe country that just destroyed everybody else, was the dominant hegemon, except for, of course, the Soviet Union, which is this piece of shit entity that occupied Eastern Europe for 50 years. But anyway, they tried to be communists. They tried to do their thing. You still had this dominant entity that was the United States that had most of the world's gold in its coffers. It was relatively safe, democratic, protected by two oceans. So people just said, well, let's just leave the gold in the United States and let's start trading around dollars. And that was basically the start of the Bretton Woods system. So again, but you still have to keep the thing with these monetary systems is you still have to keep a peg. You have to keep the government honest. So the government will say, even if people don't know the backing, and it's so funny. I've come across this, like even with Swiss, I talked to Switzerland has always been recognized as sort of like currency that holds a lot of value. They're saying like it's for every Swiss franc that's printed. There's always, you know, an ounce of gold that's behind it. And like, that's definitely not the case. Like, as I show you here, you can see that it is very good. Even in 2010, it was 50% backing, but it was not 100. Okay. And now it's even like well lower. It's like below 10%. But in any event, it's just a side note. People like might tell you that it needs to be 100%. Definitely doesn't need to be 100%. And first of all, governments would never want it to be that way because there's literally no flexibility for them to do anything else, which again, I'm not saying it's good that they have it, but no government is ever going to go on to 100% gold standard or 100% Bitcoin standard. So that's the thing. That's the thing basically is we're talking now about going on to something that would be a new Bretton Woods. It's basically saying, well, we know that there's 21 million Bitcoin around the world. Are we going to have, like you said, Marty, 5% of the Bitcoin inside of the United States, or 10 or whatever? I mean, obviously 10 would be a huge number. But the challenge, as we talked about at the beginning of the show, the challenge for governments who have simply waited too long in this very brief monetization of new base money, which is Bitcoin, over the last 15 years, the challenge is buying it without absolutely exploding the markets. And, you know, your guess is as good as mine, Marty, and how that's going to work. Because I just, like, again, even if it has to do with this gold revaluation scheme in the central bank of the United States, one way or another, you're going to explode the price if it's announced that, you know, the central bank is buying Bitcoin. So what are your thoughts?
Yeah, it's again, you have to thread the needle, and it's hard. But as you're describing, like Bretton Woods, what happened after 80% of the gold in the U.S., everybody got together, said, all right, we're going to base it off this, use the dollar, and anchor that to gold fractionally, and fix the global currency system. It's hilarious because ultimately the problem that led to a purely untethered fiat monetary system that we've existed under for the last 55 years was the fact that France came to the U.S. in the late 60s, early 70s, and said, hey, the world's pretty safe now. We'd like to take our gold in kind and put it in our own vaults. And the U.S. was like, we may not have it. And so you had this fuckery. You obviously had this fuckery over the course of 25 years. Where the whole world coalesced on the United States, said, hey, you guys are democratic, you've got secure borders, you're pretty stable economy and political system, we trust you. And that trust was completely obliterated in relatively short order. I mean, 25 years is not a long time.
And the French always screw us, man. They just don't care. It's good. It's good. It's a good thing, I'm saying. The French are always keeping the Americans honest. And that was like literally one of the last thing that Charles de Gaulle, the former the president of France at the time, before he died, was he started to call the gold back. And it was basically that, you know, that was one of a couple other reasons, right? We had Vietnam was raging in the United States, and that percentage, as I told you, that is printed money versus the national debt, that was really stretching at that time as well. It was going up to 15% at the time, which was huge. Like when the Federal Reserve started, it was zero. Literally, there was zero Federal Reserve notes and Federal Reserve bank reserves as a proportion of the national debt. Federal Reserve was mostly like a banking entity. They were lending to banks, so on and so forth. Again, I'm not defending the Fed. I'm not saying, just talking about the history a little bit here. Now the Federal Reserve is 20% of the national debt. 20% of all treasuries outstanding are owned. That is printed by the Federal Reserve. That means printed to buy them, which again is an artificial floor on the Treasury, which is not good because it distorts markets. Anyway, things were being stretched like that during the 70s, right? So things were being stretched. You had 15% the Federal Reserve was owning of treasuries. De Gaulle was like, enough of this. Let's get some gold back. And that's when Nixon temporarily closed the gold redemption window in August of 1971. And here we are today. So the long and short, yeah, I mean, as far as the history goes, this is the first time, like this 55-year period is the first time that we have been, like as a world, it's like from recorded history, like there's been no sound money officially backing. Yes, like I said, there still is $3 trillion worth. It's about 1.2 billion ounces, if you want to do the math. It's $3 trillion worth of gold in central banks today. And that's not all the bullion, by the way. There's even more in private vaults. If we go here. So the bullion itself is about 7 trillion. This is another thing with gold bugs, like that. It's like gold is also in like jewelry. It's all over. So you never know where gold could fall. But I try to break it down in these buckets for you. You can see all-time gold mined, then gold that's not in industry, right? Which is a smaller percentage than in silver. Silver is like 50% in industry. And then like the gold that's in jewelry, gold that's you can hodl in bullion form. They're about 50-50. It's a little bit less in bullion. And then a subset of that is central bank gold. So it's right here. So that's the next one on the list for Bitcoin. So look, again, I think it's inevitable. It's 100% normal that governments are talking about it. I think it's interesting. It's a little bit wild that it's the Trump administration that might be the one to do it. I mean, why not, right? I mean, it's if there's going to be an administration to do this, why not have it be the Trump administration? Makes sense. I hope they put it in the Treasury. I really do, because if they keep it, if somehow he strong arms the Federal Reserve to just print and buy, that's not going to be a good sign.
I mean, I think signs are pointing towards it'll be in the Treasury. But going back to Bretton Woods 2.0 and comparing it to what happened in 1944, in the aftermath, I think we're both in agreement that it is not clear to us how you actually execute this in a somewhat smooth manner, a smooth transition to a new monetary system. However, let's just run with the assumption that you figure it out and we'll price in some volatility and chaos and market blowups as we transition to a new monetary system. Comparing it to Bretton Woods 1.0, with the U.S. being the trusted third party to custody the world's gold. And then if somehow successfully, if Scott Bessent is truly trying to manufacture and bring forth a Bretton Woods 2.0 monetary reset type agreement, and Bitcoin is at the core of that, like that would be massively beneficial compared to Bretton Woods 1.0, because instead of this trusted third party in the U.S., where you're just saying, all right, we're going to put all the gold in the U.S. We trust that the U.S. isn't going to spend it. They're going to keep it in the vaults. And when we go to call it, we'll be able to get it in a timely manner. Turned out not to be the case. You have Bitcoin as this strategic reserve asset for the global monetary system, and everybody can validate and verify themselves because it's this open source protocol, this transparent ledger. And this is where the white pill comes in. It's like, again, who knows how that transition happens, if it materializes in this administration or even in our lifetime. But if you were to put forth the case of why it should happen, it's like, all right, let's take the harsh medicine now, stomach the volatility and the market chaos that is likely to ensue from this type of tectonic shift in how the global monetary system works and is viewed. But on the other side of that, if Bitcoin is at the core, you have a much sounder base, because France doesn't have to trust that U.S. has the gold. They can put the Bitcoin in particular wallets and be able to verify that they're there.
Yeah. And I don't think we're at the place yet, although, again, it's ironic that we're at 2/3 of the gold value and market cap right now. That's in central banks. That is, as I said many times, the 3 trillion that's in central banks. Since gold has been so demonetized and so degraded over the last 55 years, that's not enough to change the whole monetary system, right? So again, this comes back to the question of the pegging that I mentioned earlier. If you really wanted to hold government's feet to the fire, right, like you establish a peg and you hold them to the peg. Again, it's something they always break anyway during wars. So it's like it's just kind of a dumb game, right? For those of us that follow this enough, it's like, why would we even bother about what the government does with their currency when we can just hold the Bitcoin outright? So you and I, Marty, are, and I'm sure most of your listeners are like, we're purists in that way. We just, I don't have to worry, even though it is open source and it's great. And I'm glad that it's much better than the French having to worry about where their gold is, or the U.S. unnecessary wars of Vietnam, which I think, again, is great. Just the asset value itself is so liquid and so pristine that you're going to have to hold it no matter who you are. I think that's fine. I think that's great. But I don't see, at least at the moment, I don't know, you tell me if you're hearing things differently, but I don't see at the moment how you would convert the dollar as far as like, you know, some convertibility or a peg or something like that. That would seem maybe too rigid at the moment. Certainly too rigid for someone like Trump.
Too rigid. I don't think the market cap needs to be orders of magnitude harder. I try to peg it, and we have, I believe, Bitcoin will be a multi-$100 trillion asset.
I agree. I think that that is, and that's probably where we're going, frankly, because again, you look at the 3 trillion, like I said, a couple years ago, a decade ago, like you're at 1 to 2 trillion. Gold has gone up in dollar terms. Bitcoin's gone up in dollar terms. It's going to be the same. As long as we have this currency that everybody has to use, you have to pay your taxes in it. They're going to devalue it. Yeah, they can try to do good things on the edges and Doge and all the rest, but they're still going to devalue it. So again, your escape hatch just remains Bitcoin. It's all roads lead back to Bitcoin. I can show you one thing here regarding... go ahead and keep talking if you want while I find it, but it's similar.
UX upgrade for your site. You need a search bar so that you can just...
Yeah, this is all local stuff. It's just don't show the slogan. It's too
too much alpha.
Making demands now. No, you can. I mean, it's fine. I just can't.
It is.
I do need a search bar. You're right.
It is perplexing. Just trying to grapple with everything, and it's literally uncharted territory. Like,
yep.
An asset like Bitcoin has never existed, and we could sit here and try to predict what's going to happen. But I think that's one thing. If you've been in Bitcoin a while, you get to your Bitcoin's end states, like you don't know what's going to happen. Like you said, the thought of a strategic Bitcoin reserve being seriously considered in the United States in the year of our Lord 2024 would have been objectively insane 18 months ago. And yet here we are.
Here we are. Yeah. So here's what I wanted to show you is, so this is, again, I like to just draw trend lines. Long-time viewers, listeners of your show probably know that. And just measure the growth rate of those trend lines, right? Forget what CPI says. Just look at corporeal things, real things like the money supply, and measure. Now, here's the monetary base. This is what you won't find anywhere else in the world. They kind of like, there's no APIs for this stuff. You got to manually go and calculate it. We are actually at the lower end of the band, right? Closer to the 2.5 percentile than we were during COVID, which we were at the top end of the band. But look at that R squared, 99% R squared, okay? Now, as I said, this is like Wittgenstein's ruler. I always have to remind. So like there's 50 different currencies behind here. This is a very simple, I'm not saying this is scientific, but it's because like back here in the 60s and the 70s, I don't have all the 50 currencies that I'm using here now. So the growth rate, the slope of this curve is not exactly 12.7%, which is my scientific calculation. That's my headline. Monetary inflation number is 12.7%. It's actually a little bit lower, which is surprising. You would think it would be higher because there's less data in the bottom, in the back, and there's more data in the top. You follow me? Mm-hmm. So I'm adding more currencies. But actually, with going back to this Wittgenstein's ruler thing, they sort of lose value against the dollar. It's actually a little bit less. It's like a little bit less than 11% even. Regardless, you can schedule it out. You can run a trend line. It's exponential. The monetary world, the finance world, because of compound growth, it grows exponentially. All right. So if we put it on log scale. All right. Here's an off log scale. Here's log scale. It becomes a straight line, and then we can project out. And though we're at 27 trillion now, and again, as we said, gold used to be like 1 to 2 trillion in dollar value, even just like a decade ago. We project this out now, even only to the end of, I think it was like 2 halvings from now or something around that. Why I put this, I can't even remember why I put this December 2023. If you do that regression, look at the black line, the middle black line, what it says in the tooltip, $83 trillion in 9 years or so from now, 8-9 years. So after the next two halvings, roughly, of Bitcoin, we could indeed be somewhere around where all, and again, I don't know if this is going to be orderly. I don't know if this is just how if it's going to, just continue to inflate on this roughly 11 to 12% per year growth curve that I'm finding here. But we might indeed be to this mythical $100 trillion valuation of Bitcoin by the time that Bitcoin sort of absorbs the rest of fiat money, and it's just so huge that people realize, well, fiat money needs to be tied to Bitcoin in a stronger way than just than it is now. At least if the state wants to still be around and collect taxes and pay services. Maybe things become more decentralized, like the sovereign individual style. It's hard to tell, but I'm not holding my breath for that, because right now where we are in Eastern Europe, things are fucking crazy, and you got mad dictators running around trying to genocide Ukrainians. So, but that mad dictator is saying he recognizes the value of Bitcoin. I just spit a lot out at you there, Marty. So
yeah, well, it's weird too, because you have this. I think one of the variables that hasn't been like, is the big print going to come from the need to basically subsidize people's wages? Because is this AI trend real? Is it actually going to bring massive productivity? I've talked to a number of people. We've seen it within our portfolio, at least on the software development side. It is pretty clear that AI has reduced the need to expand your headcount at the company level, because very good engineers can operate as if they're 10 engineers. So it's like a 10 to 1 productivity improvement, 10x productivity improvement. And, obviously there's a massive amount of debt, but you also have these deflationary pressures that are entering the market at a very interesting time. And again, you mentioned early 80-year cycles, obviously the fourth turning. It's a popular book in the Bitcoin space, Sovereign Individual, and both of those books predicted or described that we're living through this inflection point, and things are going to get weird. You have insane deflation in the digital world that's driving insane productivity. Like companies that used to take 10 to 15 member engineer teams to build a scalable product, now arguably many people would say need 3 to 5. What effect does that have? And I actually was reading a thread earlier today too, is that you have this problem where these efficiencies are being recognized at the company level. And during COVID, when we printed a bunch of money, a lot of these big tech firms hired people at the managerial level, director level, and it's becoming abundantly clear that they are not necessary. And a lot of them are getting fired. They're going out to the job market. They've built up this insane lifestyle, which dictates that they need to make a lot of money to keep it up. And they're being recognized as somewhat useless within their companies, then going out to the job market trying to find another job and hitting a brick wall.
Yeah. There's a lot of cross currents there. It goes back to as well how's that going to jive with the onshoring stuff, manufacturing, retooling that needs to happen anyway, and just getting massively outcompeted by China and just something as simple as the drone market. So, all that's going to play into it. The cycle thing is just one comment on that. Cycle thing is interesting. It's there's a small rub, at least if you look at the World War I and World War II, they don't really fit there. You have to pick one wherever you want to match with the cycle. But if you are on this sort of 80-year winter, spring, summer, fall cycle, right? The World War II, I think it is, doesn't really fit on that cycle at all. But so I'm not at all married to that idea. But what I would say, looking at something like this, and we've looked at variation of these charts over the year, Marty, over the years. But let me put the tooltip back. So this is when I started to do the monetary base sort of research that I do. And you see there in the tooltip, it was a little over 20, almost $21 trillion equivalent monetary base. Okay. Now we're 27. We got up to 30 trillion with COVID. And we're below trend even now with this sort of, just massive deleveraging that they've been forced to do from the massive COVID inflation. So we're below the trend that is 33 trillion is the trend. So if you just kind of back out and look at it this way, again, it's not perfect cycles or whatever. I'm just starting it from this end of the Bretton Woods period that we've talked about, when the dollar started to freely float in the gold started to freely float in the market, dollar as well. You see, it sort of takes away the noise, right? You can have long, here 95, you can have just sort of long lulls where it's a little bit lower than, a lot of hot money printing after the global financial crisis. It's on the top end of the curve, but I think it's a good just quick and dirty look at sort of whatever we talk about week in and week out on the podcast. And I do the same. I'm doing, these videos, just trying to look at one part of the market, or look at the ruble market, or look at what the gold is doing right now versus some other asset class. One thing we know for sure is that in the last 55 years, they've just continued to print worldwide as a sort of central banking polity. And it is pretty wild that, here we are, 100K and rising very quickly from there. So nobody really can make the excuse now that it's just sort of a mystery, except for Peter Schiff, of course, that this is some mystery asset that doesn't work and no one understands how the collateral value, the utility that it actually has in the marketplace. Nobody can make that excuse anymore. So
yeah, and going back to the cycles, the Bitcoin price cycles that we were talking about earlier.
Mm-hmm.
The comment you just made, I think it's becoming abundantly clear to everybody, right, this thing is not dying. Maybe I was
Lindy
wrong.
effect, right?
Lindy's kicking in. Obviously, we've talked about not us specifically, but it's been talked about in the industry. It's tracking this internet adoption cycle that happened in broadband internet. Hit the tape in the 90s, and that was an S-curve adoption. And when it comes to Bitcoin price cycles, it could be wrong, but it just feels I don't know, I just had this intuition that we are approaching, we had the original monetization and the lull, I would argue, between 2013 and 2022, and now 16 years in, Bitcoin hasn't died. We've had 4 of these cycles. It's becoming abundantly clear. And then you just have the social, psychological aspect of it. Stamp of approval from BlackRock and the institutional investor class, and now looks like stamp of approval from the U.S. government. We could be at the beginning of the exponential part of S-curve adoption.
Yeah, well, that's a whole nother interesting theory if that actually happens. So I was one of the first people, and I guess not the first person, but one of the first people, even before Plan B did his S2F model. I had posted that Bitcoin follows a power curve somewhere here. I think it was the end of 2018, right at the end. So it was right here. Bitcoin was at 3,500, and the curve itself, it was below the curve, right? We just had this puke from after the 2017 top, and then we puked out down below 3,000, right? And that's right here is when I posted the curve for the first time, and it was very close to what it is now. If you go to my website and you go to, instead of /top money, but /the chart, porkoblis.io/the chart, you'll see this chart as well. So you can play around with it and use the slider. It's not as detailed as this, just because of bandwidth and stuff. It's, for data purposes, but It's a very close. It's a very close thing. And basically from 2016, 2017, this curve has not moved much. Okay, so it does. I can't show you because I don't have the software good enough. If I put this on log, so if I compress the right side of the x-axis and expanded the left side of the x-axis, you would actually see this turn into a straight line. So unlike exponential curves, right, which we just showed here, which are straight lines on log linear, a power curve exhibits a straight line on log. And unfortunately, with this, my current setup with this software, I can't really give you a log. I can't convert it right now. But if I did, you would see this line turn into a straight line. I do have that on my website, by the way. Actually, I can show it on my website. Let's go here. It's only in monthly, but here's it's kind of janked up. It's it's not great, but this is log, and you can roll my goal is to make it easier for you, dear listener. Feel free to donate if you want, but you can roll your mouse over this and see the different values. But this is the same chart, it's just on log. So if we expand the left side of the x-axis and compress the right side, right, it will show into a straight line. That's what a power curve does. This looks like a pretty fucking powerful trend. This is what power curves exhibit, basically, which is different than exponential, is they exhibit proportional growth. Okay, so it's called scale invariance. It's proportional growth. So when Bitcoin was really small, it was growing a little bit faster, right, than it grows now, but it's bigger now, so it grows a little bit slower. That's why you get this sort of decaying. If you look at it on log linear, it looks like kind of a decaying line. It's not that it's not that quickly decaying. Might look worse to you if you want to get to $1 million Bitcoin tomorrow or whatever. But look, I mean, we take this out to, on this chart, we take it to 2033. Remember that number, by the way, from when I showed you the monetary base chart. We can get to $1 million Bitcoin in 2033. So after the next two halvings, okay? And just on the power curve. But if you go back to the website and you look here on log, it really looks powerful, right? It just looks... you can see like it's kind of a line. And there are other people I've been posting with. It's the best Bitcoin data group on Twitter. You can find a lot of physicists and scientists I've kind of teamed up with to do this stuff. I mean, everybody just does it independently, but we like each other's work and stuff. So I would encourage you to read some of that stuff. I mean, it's what it shows is it's a different relationship than most of the financial markets. Most of the financial markets exhibit this, which is a straight line on log linear, which is exponential growth, which is constant growth. So unlike proportional growth, which I said before, it's constant growth. So constant growth is just straight up, you get to a compound annual growth rate a year. And what is that with base money? It's like 11, 12% constantly every year, 11%. This is it's 12.7 it's my number that I've derived, but every year, 12.7%, the curve will grow 12.7%. Okay. With Bitcoin, at least according to the statistical sort of analysis, it's pretty 96 R squared is damn strong. And so far, it has just exhibited that. Could it, so what you suggested, Marty, is something that a power curve does not do, actually. It just moves in this like straight line on a log curve. It just moves here, but it's still a fast, like right now, if you looked at the slope of this curve, of this power curve, it's 45% per year. 45% per year. It's massive. That's a huge number. I mean, we just talked about treasuries, right? Like, forget of which way the direction up and down of the yield curve. It's 4% a year. And that's stressing the markets, right? 4% is stressing the markets. Bitcoin is growing at 45% per year. And you'd have to go out like another, I don't know, 30, 40, 50 years or something to get something that would get down to the S&P 500 level. So it's a massive, even though it doesn't look like a massive growth rate with this little log linear chart that most people look at, it actually is. I mean, it's huge. So I'm still, I don't like write about it a lot. Like I talk about it on my channel and stuff, but I've been talking about this power regression stuff since even before Plan B was doing his little stock to flow analysis, which is it's more has a relationship to an exponential curve. But I don't think that Bitcoin exhibits that relationship. But we're all going to see how it works out in the next, like I said, 2 halvings probably, because the proof will be in the pudding in the next 2 halvings for sure.
Yeah.
All right, man. My daughter's calling me.
All right. I'm gonna. Yeah. Now you get my brain in a pretzel. This is always fun.
I hope it more or less made sense. We like to jump to different topics, which I always enjoy with you, Marty. But I hope it was clear enough.
Yeah, I think you're good. Next time we'll talk, we'll be above 150,000. Bitcoin will be larger than all the gold held by central banks. And who's next on the fiat-based money list?
Japan.
Japan.
Next up is Japan. I should put the target price for Bitcoin. I don't have that on this chart, but you can see it here. porkobelisk.io/top money. Japan is at 4.39 trillion, so a double basically would take us there. And those are the majors, man. We passed all the mid majors. The only 4 currencies left are the yen, the euro, the yuan, and the dollar. And then gold, of course. As we talked about, all available gold in the world, non-industrial gold, that's about $16 trillion. Easily attainable.
Humble 16x from here. Or
easily
8x.
8x, yeah. Easily attainable. Yeah.
All right. You go attain some quality time with your daughter. You enjoy your Christmas.
Merry Christmas, my friend. Congratulations on everything and just being a strong Bitcoiner and a good friend. And I wish you all the best and your family this Christmas season.
Well, Merry Christmas to you too. And the feeling is mutual. Thank you for being who you are and coming back and doing this. We'll catch up in the beginning of next year.
Look forward to it.
All right. Peace and love, freaks.